Welcome back. This is Eric Snell from Vanilla Equity. Today we have McDonald's on the radar. Things are pretty bad in the world. We have a recession maybe in half of the world, and the other half is still arguing whether we're in a recession or if we're going into a recession. And during these times we have the assumption that everyone is going to consume less, and if you have a family, maybe you do your outdoor dining and less expensive restaurants. And that's when I start to think about, what could that be? Well, traditionally it's been McDonald's. They've been internationally known, and I think that's one of the brands that everyone in the world knows. We even have the Big Mac Index, and I think it's a good company to look at because it's not bound to a specific currency. So there's a lot of fast food restaurants that compete with McDonald's, but they're not as international and they're more pegged to a specific currency. So if we look at the whole world, I think this is a very interesting company to have a look at. But since I've had this view probably 15 years that, times are bad, let's invest in McDonald's, maybe I need to have a look and see, is it really worth it? So I'm just gonna go through things that I like to look at when I look at these companies that are on my radar. And you really don't need to have a Bloomberg subscription and pay huge amounts just to get this information. Nowadays, actually, we have a lot of websites that compile the information in a very, very nice way. And my go-to tool is usually, or where I start, it's MSCI, who's responsible for a lot of the indices in the world. And this sort of gives me a feeling of which market or which sector is hot. And from there, I go into more micro views and look even at my own experiences with the company, if I have any. So in this case, we're talking about really international company. We're talking about international problems. So I can sort of skip that. I don't need to check if the US market is going up, if the restaurant sector is blowing up. I know that now people are more stressed, so they want to have food quickly. They don't want to spend a lot, so they want to find a cheap alternative. And I don't actually know if McDonald's is that cheap anymore. It used to be that it's very cheap. I think they've hiked their prices a lot. One thing that's very good with McDonald's that a lot of different companies around the world, specifically outside of the US, haven't sort of adapted, still not, I don't know why, but that's the drive-through restaurants. And when you look at drive-through restaurants in the world, there's not a lot of companies doing that. And I think since the pandemic, I think that trend is just going to grow stronger. Of course, you want the home deliveries, but also the drive-thrus are really, really hot. And there's not a lot of competition there. So I expect a lot of people to be stressed out, working extra hours, driving to a drive-thru, and trying to find cheap foods. And that's where we have McDonald's. So for the pages that we'll look at, I'm really impressed with what MSN Money is doing. They compile a lot of information very, very conveniently. So I've gathered some screenshots here just to show a little bit the health of the company. I'm not talking about the nutrition value of their Happy Meal. I'm really talking just, is the company healthy? If we're going to do a sort of in and out stock heist and we really want to make a profit by investing in it and going out, investing in it, going out, maybe holding it for a longer period. We want to make sure that we invest in a healthy company. So what's healthy? Well, for me, that's something that's profitable. And I always try to compare, when I look at a company, I always think about what would it be in a small scale. So if we think that, let's say your cousin has a hamburger restaurant on the street and it's been open for 2 years, then he wants to sell it to you. Would you buy it from him? How much would you pay for it? Now, this cousin of yours that has opened the restaurant, he probably doesn't have the brand power that McDonald's has. So this is one big problem when we try to calculate the correct share price for a company, because the brand itself, it's worth a lot. So you have no brand name, so there's no value in that. So it's much easier to calculate the actual value. Then the question is, okay, is the business profitable? Is your cousin going bankrupt? The restaurant has been open 2 years. Okay, so does he pay himself a salary? How many employees does he have? Does he pay out dividends? Does he own the real estate? So for McDonald's especially, real estate is a big thing. And if you go on their website, you can actually find a section where it's about real estate, and they're asking if anyone has any real estate in mind where they think McDonald's could open up a restaurant. And this is huge. I mean, they spend a lot of time finding the right location, and in most cases they own the location. So then of course we think, well, what about real estate? We all think that the real estate prices are going down a little bit next year, if not already now. Will that affect McDonald's? And personally, I don't think so. I think these are business locations. They're very, it's a little bit like owning an apartment in the center of a capital city. You won't notice the differences that much. If you're in the countryside somewhere, yeah, good luck trying to sell your house. But the prices will remain always quite stable in lucrative locations. And McDonald's definitely knows what a lucrative location is. So we have MSM Money, and we can compare a little bit old data. You have to look at the years on these, because some of these this information you have is very old. So if I would like to see the quarterly reports, and for US companies, you're probably aware that they report quarterly. If you look at, let's say, European companies, it's usually a yearly reporting that they do. It's been more common now with quarterly as well, because that seems to be the trend, and it steers as well, of course, how the companies are run. If they try to meet quarterly targets, or if you try to meet a yearly target, it's a big difference. That's in any area of life. If you try to just do good 2 months, or you're trying to be good in 10 years, I mean, that's a completely different approach. Anyway, you can find these quarterly reports on their website. So if you go under investor relations, you can always find, or in most cases, most companies have that information available. And when they have these earning reports, a lot of times you can call in as well. It's quite interesting actually to listen to these reports, especially if they have a Q&A where people can ask questions. It's a little bit subjective when you look at the reports that the companies report on their web pages. I think a lot of times they, of course, want to emphasize the good parts, and you might be sort of easy to get the big misunderstanding of the current situation of the company. Now, McDonald's is really healthy. They have growth. They needed to shut down a lot in Russia, but they're still very profitable. They pay out a dividend. Now that's a good sign usually of a healthy company. If you're going bankrupt, you're not going to be paying any dividends. But of course the dividend is also something that most investors actually want to avoid, because it has tax consequences, such as a withholding tax that you might not be able to get back. But all in all, when I look at the numbers here, I think it's healthy enough. I think it's good to have on the radar. When I look at the restaurant itself, when I visited the last time, I have to say that there is big changes. Especially in Europe, you have these restrictions on plastic, and first you have the plastic straw thing. You have paper straws that just simply melt in the drinks. You have the problem with the McFlurry. I don't know if you heard about this, but in some countries they're not allowed to have the plastic spoon, which actually enables them to stir the McFlurry, so it actually becomes a McFlurry and not just a McSunday. In Europe, you don't have that, so they can't stir it. They put a IKEA spoon there, so it tastes like wood, and it looks exactly the same as a sundae. It's not mixed up at all. So when you're traveling and you want to eat at McDonald's, make sure that in that country they are actually still allowed to use plastic. Now, I can't say I'm for plastic or for using paper and wood, but it's just something to bear in mind. As for their Happy Meals, I really don't know. I never bought a Happy Meal, an adult Happy Meal that they have nowadays. I can see that they have a lot of, they try to be sort of involved in the community. If you go on their webpage, they actually have like 4 sections, something like about us, the company, the community, and contact us or something like that. And it's a huge part of their marketing is being a part of different communities. And they also sponsor now the World Cup in football, and they really try to be out there, and they try to represent minorities, and I think they really try to make sure that they're trending and never left behind. So some companies, they want to be more like let's say Switzerland, and neutral, and don't take any views, don't take a part of any of the daily discussions. But I think McDonald's really wants to be in the game, and they want to be aware what the people are talking about, and they want to be a part of it, and of course take advantage of it. So of course they have also the trendy vegetarian things, the plant-based foods, the meat that's, instead of being 2% meat, it's 0% meat. Oh well, I guess we have to get used to that. But that's not really setting them apart from other companies. Now then, when we look at the stock price and development in the stock price, and we compare it to other similar companies, and it's not that easy to find comparable companies. I'm thinking about something like Papa John's, that would be as international. I think McDonald's, the brand is so strong, it's just crazy. I mean, if you go to an airport, anywhere almost, you'll find a McDonald's. But when we look at the stock market and the price has gone up. They actually had a pretty good year this year compared to a lot of other companies. And I think this is the basic assumption that we all have, that okay, in bad times we opt for cheaper foods. And I think now it's just a question of waiting. So we're waiting for maybe a little bit of bad news, and just so the price will dip a bit, and then we go in, we make a small profit, and we go out. I'm already invested in McDonald's, so I'm also looking maybe to sell at a good time and then buy back the shares. So for me, this is still a good company. When we look at the figures, it doesn't look like anyone is going to beat them. You might think Burger King would be a good competitor. If you're looking for Burger King, you have to look for the Yum brands. They're part of that, and they're also doing well. I don't see them, at least where I've been, I don't see Burger King as often as I see McDonald's. I don't see Burger King marketing the World Cup. It's not just on that level. It's a little bit like Coca-Cola and Pepsi, that Coca-Cola still has the upper hand when you look at the public perception of the company. So let's see. Let's go in and out and do a stock heist on McDonald's.